But we have Manisha joining in with the latest from the commodity markets. Manisha, what's hot?
The crude is really because, and not because it's boiling hot, but because it's continued to extend declines on the lower side. Well, last 2 weeks actually have seen declines in crude oil prices. And with that, we're down by 10% for the month of August. We are down 13% for 2025 till time. And we are also trading at 2-month lows in the international markets there, with 62 for WTI and 65 for the Brent crude oil prices. So it has been a sharp decline over the last couple of weeks there. Well, interestingly, it is the higher supplies in the global markets. The U.S. production is near record highs. The U.S. inventories have been rising as well. OPEC has increased production until the month of September. So you are looking at enough and more supplies there. Apart from that, it really is about the U.S. and Russia meeting, which has failed to get us a ceasefire. But a peace deal is what markets really seem to be talking about right now. And Russia, in the meanwhile, has asked for Ukraine territories. More conversation on that is expected today as the U.S. president will meet presidents and head of states from NATO, France, European Council as well, and then Ukraine, France, etc. So that meeting is something that the street will keep an eye on. Just to take a step back and give you through the timeline, really, when it comes to the Russia and Ukraine conversations there, we already have had the US, UK, European Union prohibit import of seaborne crude oil in the first year of Russia-Ukraine war itself. And that is the reason much of this crude started to flow into Asian countries like China, Turkey, India, etc. So much so that India was buying 40% of its crude oil from Russia in the last couple of years. Adding to that, you also have the G7 countries imposing price cap on Russian oil at $60 in December in 2022. They have tried to revise it much lower to almost around $47 a barrel as well, but there is no backing from US and we haven't seen that implemented because of that. The other thing really is about sanctions, not just on the crude, but also on Russian companies, individuals, insurance, fleets, etc. There also are secondary sanctions in place, especially with India bearing the brunt of it, where 25% additional would come in from 27th of August. If more negotiations do not go through. Interestingly, when you look at the Chinese data, all of that has come in on the weaker side for the month of July. That seems to be weighing onto the crude oil prices as well. So whether it is about July industrial production, the retail sales data, the new home prices, it is lower on a month-on-month basis. It is also lower on an estimated basis as well, and lower as compared to previous year also. So that doesn't augur well for many of these commodities, which actually have started Asia on a weaker note today. And when you talk about the outlook, well, that seems bearish as well, because most of these banks and brokerages are talking about lower crude oil prices. 60 to 66, as you can see on your screen. Goldman Sachs also has revised its 3-month target for the crude oil prices. It does believe that 66 of an average is what you could see. But apart from that, it really is about 60, 62, 65 is where we could be looking at the crude oil prices going forward. There's HSBC talking about 68, 60 from USIA, and ETO market says that sub-60 kind of levels also could be seen. If there is some patchwork done, if there are some resolutions coming in, things are sorted, you could be looking at sub-$60 as well by the time we end this year.
All right. Manisha, thank you very much for that. That's commodities in focus.